Good morning and welcome to Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, in fact, today it's Markets with Santo and Santo because CJ just called in sick, though I suspect it could have something to do with having stayed up the whole night to watch the Argentina versus Croatia semi-final. Well, that said, in the spotlight this morning is Paytm. The stock is likely to see some activity after the board yesterday announced the buyback price of approved the buyback proposal worth about 850 crores at a maximum price of 810 rupees per share. Now, this buyback is going to happen through the open market route. Now, CJ here has always been a big fan of Paytm, and he's been repeatedly pointing out the fact that there's been a steady improvement in the company's operating fundamentals, and according to him, he says that HNIs are taking a shine for the stock, and the buyback proposal should definitely help ignite fire under the stock, and sentiment for the stock has anyway been on the mend for the last few weeks. But CJ, there's a slight difference here. The buyback is going to happen through the open market route and not exactly through the tender route here. So, which means that it's not a given that your shares will be accepted. And also, let's not forget, Paytm has a huge equity base of about 65 crore shares. So, at the maximum offer price of about 810 rupees, the company will be buying just about 1.2 crore shares. And again, let's not forget that when a company does an open market purchase, buyback purchase, it need not necessarily buy all the shares at the highest possible price. So, even considering an average of about 700 rupees per share, it is not going to be a huge number of shares that is going to be bought back. But at the same time, yes, I do take the point that there has been an improvement in the company's operating performance over the last few months, and the company has said that its average loan size also has risen to close to about 8,000 rupees per user. Many brokerages have also turned bullish on Paytm, but the stock price really has not been going anywhere. And while the buyback proposal could kind of provide a flow to the stock in the short term, it's unlikely that you're likely to see a major upswing. The company has said that it will report an operating profit in the September quarter next year, and it's also guided towards generating free cash flow over the next 12 to 18 months, which many brokerages have taken note of. But once again, a lot will depend on how well the company is able to achieve the milestones that it has set for itself, and more importantly, whether the market feels that the company will be able to hit those milestones. So, in the months leading up to September, which is when the company has said that it will be able to report an operating profit, you can already see whether the market is ready to believe the company or not. And that said, let's move on to the market setup. Now, the SGX Nifty futures are indicating a strong open for the market today, and overnight the queues from Wall Street have been pretty robust, not just Wall Street but also European markets. This follows the lower than expected inflation reading in the US. This again given rise to hopes that the Fed might pause rate hikes sooner than expected, and that's expected to drive risk appetite further and also stock prices. Now, at the same time, this is going to make life that much harder for the Fed, because rising stock prices is the last thing that the Fed would want as it tries to control inflation. So, while the Fed has maintained its stance that it will battling inflation is its first priority, and that is something that the market will need to take heed of, and that is probably the message that might again come through tomorrow when the Fed announces its next rate hike. A quick look at the FNOQs this morning. We are seeing long build up in futures of Tata Communications, Polycab, LIC Housing. All these three futures had seen long build up yesterday also. Astral is the other futures which is seeing a long build up, and we are seeing short build up in futures of Dr. Lal PathLabs, Laurus Labs. Both these futures saw short build up yesterday as well. Canfin is the surprise addition on that list. Canfin Home Finance is also seeing build up of short positions. We are seeing unwinding of long position in futures of Dalmia Bharat. If you recollect, Dalmia Bharat had the day before yesterday announced that it will acquire the cement and power plants of the JP Group. Moving on to our newsmakers for the day, the first one is Colgate India. Now, the company, the stock will be in focus after the company new management has met up with analysts. So, though most analysts are not at this point very sure about how the company will be achieving the targets that it has set out for themselves, because it seems like a fairly tough or tall order according to brokerage house Citi, which has said that achieving volume growth and premiumization will be a tall task. Also, the new management's two-pronged strategy will require sustained investments according to Citi. TVS Motor is the other newsmaker of the day. The company is planning to launch Euro 5 two-wheelers in Turkey. And with that, let's move on to the hot brokerage bets this morning. Dr. Lal Path Labs is the first one. Now, UBS has rated the stock a buy with a price target of 2,800 rupees. Now, the stock was under pressure yesterday. That this followed the Delhi state government's move to announce additional free tests, taking the total number of free tests to about 460. Now, according to UBS, this may not be a very big negative for Dr. Lal Path Labs, as the market is fearing. That's also because 80 to 90% of the tests currently already meet requirements of the targeted population, which means that the additional tests won't really make much of a difference, and so it won't really have an impact on Lal Path Labs earnings. Havells India is the other brokerage pick. Now, Credit Suisse has rated the stock as an outperform with a target price of 1,450 rupees. Credit Suisse expects margin improvement in the electrical products portfolio in the second half of this year. It also sees margin improvement in consumer durables in the fourth quarter, and besides, the lighting segment is seeing the end of the price erosion according to the brokerage. Let's move on to the stock takes, the stocks on our watch list this morning, beginning with Yes Bank. The stock has been in the limelight for the last couple of weeks, a huge run up over the last couple of trading sessions and accompanied by huge volumes as well. The stock has now risen to about 24 rupees and has nearly doubled in the last 6 months. So, sudden interest coming in the stock. Yes Bank had been one of the laggards in the banking sector for some time, but now that seems to be changing a bit. But at the same time, there is room for caution as well. Morgan Stanley has initiated coverage on the stock with an underweight rating and a target price of 20 rupees. Now, according to Morgan Stanley, the valuations are not exactly cheap at 1.6 times adjusted book value for FY24. Now, according to Morgan Stanley, the return on assets could improve to about 1% by FY25, but thereon any improvement will have to be quite gradual. It has taken note of all the positives, mainly the balance sheet cleanup, but it said that valuations offer little room for comfort at these levels. Well, with that, the market has opened. Nifty has opened on a firm note. It's at 18,654. That's a gain of about 50 points. Nifty mid cap is also showing strength in early trade. That's up about 0.4%. Nifty Bank is flattish, up 0.2%. At this stage. Advances to declines number clearly in favor of the bulls. 1,634 stocks are up at this point and 276 stocks are lower compared to their previous levels. And among the key gainers in early trade, we have Titan, which is up by close to about 0.2%. And well, with that, we move on to the next stock on our portfolio, which is PSP Projects. Now, this is a stock on CJ's watch list, and according to CJ, the dealers believe that the weak hand have exited the stock in recent time, and that's probably explains why the stock rallied quite a bit over the last couple of weeks. Ashish Kacholia has recently bought a good chunk of the stock, and besides, CJ has also flagged the fundamental side, which is that the company is expecting 500 to 1,000 crore worth of order inflows in FY23. Well, just a couple of points there. Institutional investors don't seem to be very hot on the stock at this point in time. Foreign institutional holding in the stock has improved only slightly, but at the same time, domestic institutions somehow has been trimming their stake, their exposure to the company steadily over the last many quarters now. Last stock on our watch list this morning is KEC International. The stock is now at a 10-month high. It's been steadily climbing ever since its better than expected second quarter numbers. Also, the company announcing that it has won about 1,350 crore worth of orders across segments. That's also improved sentiment for the stock. Now, the company had raised its revenue growth guidance for FY23 following strong order flows in the second quarter. The earlier order growth in revenue was forecast at 15%. The company has now raised it to about 20%. There are a few issues as well, especially with regards to the company's Brazilian operations, where margins have been under pressure and there have been losses as well, but analysts tracking the stock feel that this should start improving from the fourth quarter onwards. Besides that, the outlook for the transmission and distribution segment, which is the mainstay of KEC International, has been pretty strong. Besides that, the company has also been winning orders in the railway segment, the civil segment, and also the oil and gas segment. So things looking pretty much good for KEC International at this point in time. And the last tailwind could come in the form of easing of margin pressures. Raw material prices have been coming down, and so have been freight costs. So these two factors should help KEC International. Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching. Also, just to remind you that Moneycontrol will be hosting a mutual fund summit today. So stay tuned for the live telecast from 3:30 p.m. onwards.